One of our fastest growing stocks just jumped as high as 20% after hours after some major news came out about this stock. In this video, I'm explaining exactly what just happened and how it might affect the stock price and if this changes the fundamentals of the company. Let's do it. What's going on, everybody? My name is Matthew. Welcome back to my channel, and today we are talking all things Celsius Holdings, ticker CELH. I first talked about this stock 2 months ago when it was about $20 or $22 per share. And if you haven't already, I highly suggest you check out this video. It talks all about Celsius. It's an energy drink and functional drink company, and it's growing revenues at an incredible rate, and it's profitable. Since then, we are very fortunate to have doubled our money in that stock, and today we have some even more massive news coming forward. And the news is Celsius Holdings has been selected to join the S&P Small Cap 600 Index. Remember all of that hype about Tesla being added to the S&P 500? Well, this is sort of similar, except Celsius is being added to the S&P 600, which is a different index. According to this article by StreetInsider.com, Celsius will replace Capri Holdings in this index. And now we have to ask ourselves a couple of questions as investors. First, what is the S&P 600 index? And then second, how does this affect Celsius stock and does it change the fundamentals moving forward? Now, before we can answer the second question, we have to answer the first one, and I'll give you a little bit of background about the S&P Small Cap 600 Index. The S&P 600 is an index of small cap stocks managed by Standard & Poor's, or the S&P, the same group that manages the S&P 500. It concentrates on smaller companies with, of course, smaller market caps, and includes some of the fastest growing and up-and-coming companies right now. And in fact, if we look at the historical performance, even though this chart only goes up until about 2017, we can see the S&P Small Cap 600 outperforms the S&P 500 in a pretty outstanding fashion, with the S&P 600 being the orange line on this chart. And a more recent chart shows that it has a 10.16% annualized return over the past 10 years, which is also very impressive. Now, just like the S&P 500, there are certain requirements and criteria enabled to be admitted or to join the S&P 600. This includes liquidity in the stock, meaning enough trading volume to keep trading smooth and allow people to get in and out of the stock without too much volatility or too big of a bid-ask spread. It needs to be a small cap, of course, with a market cap between 700 million to 3.2 billion, and it needs to be financially viable, meaning it must have positive as reported earnings over the most recent quarter, as well as the most recent 4 quarters summed together. And we all know Celsius is profitable. And the source I have for that criteria is spglobal.com if you want to check it out for yourself. And before we get into what this means for Celsius's stock price, here's a couple more pieces of important information. Capri Holdings, the company that Celsius is said to be replacing, is actually one of the largest constituents in the index when measuring by index weight. And consumer discretionary, the area that Capri and Celsius are in, accounts for over 15% of the index. And all of this info is as of November 30th, 2020, according to spglobal.com. Now, as I said before, I think this does 2 major things for Celsius stock and for the company. First, when I initially brought up this stock 2 months ago, you guys were awesome and you immediately shared this bearish short report with me. And there was another very similar report that also came to my attention soon after. I did a lot of digging into these reports, and their main claims were about fishy accounting, skeletons in the closet for management, and calling out their auditor as maybe incompetent or also suspicious. And after doing my personal research, I still felt confident enough in the company and their fundamentals and their accounting to hold the stock. The fact that Celsius has now been added to an S&P index gives me a lot more confidence in the legitimacy and integrity of their fundamentals and accounting, because these indexes don't just add any company willy-nilly. However, at the same time, the S&P 500 inclusion is by no means a guarantee. If anyone remembers Enron, they were a major corporation that turned out to be using fraudulent accounting. And at its peak, shares hit $90 a pop and fell to just 26 cents when things were said and done. Now, with this in mind, it may shock you that Enron was in fact a component of the S&P 500, believe it or not. Of course, they had to be kicked out and they were then replaced by Nvidia. And don't we all wish we could get Nvidia for $53 a share today? Now, I am by no means comparing Celsius to Enron, but I feel responsible to share both sides of the story, the good, bad, and the ugly, and remain level-headed and transparent. The point is, this inclusion definitely bolsters my confidence in the legitimacy of Celsius's accounting. But at the same time, it is not a 100% guarantee or your money back. So that's the first big change or effect on my thesis after this news, and of course, the second big effect is obviously the stock price. I'm writing this script as the market is still trading after hours, and it looks like the stock is at nearly $50 a share right now, following this 12% jump. So let's break things down a bit. Just like you cannot directly invest in the S&P 500 index, you cannot directly invest in the S&P 600 small cap index. However, there are ETFs that try and copy the exact holdings and position sizes of the S&P 600 index. And in this way, if you buy the ETF, it's sort of like you're buying the S&P 600 index. It's just like how if you buy SPY or VOO, it's like you're buying the S&P 500 index. So because Celsius is now a part of the S&P 600, any fund or ETF that is tracking the S&P 600 now has to sell Capri and buy Celsius holdings so that they can continue to mirror the performance of the S&P 600 index. And as you can imagine, this should theoretically put a decent amount of buying pressure on Celsius stock. But not so fast. After some quick research, some reports have come out saying that several stocks jump in price on the news of being added to the S&P 600, but those gains usually don't last. Instead, over the long term, fundamentals and earnings tend to take over again and dictate the price of the stock. Here is a table that shows the percent of new stocks that were added to the S&P 600 that ended up outperforming the S&P 600 index 1 month, 3 month, 6 months, and 12 months after being included. So for example, in 2016, 56% of stocks added to the S&P 600 outperformed the overall index after 1 month. But only 36% of new stocks added to the index in 2016 were still able to outperform the overall S&P 600 index in the 12 months after they were added. That was kind of complicated. I'm sorry if it was hard to follow, but the main takeaway, the point is that when a new stock is added to the S&P 600 over the next year, most of them cannot outperform the S&P 600 index, the index they were just added to. At the same time, pretty consistently, over a third, or about 30 to 40% of new stocks added to the S&P 600 index do end up outperforming the S&P 600 index. And with the numbers that Celsius has been putting up lately, I would not be surprised if they fall into 30 to 40% that does end up outperforming. Now I know this is getting a little bit dense, but the last thing I'll say is that this report says new firms added to the S&P 600 experience a significant price increase at announcement, just like Celsius is doing right now, but their research says the price and volume effects are temporary and are fully reversed within 60 days. What I'm saying is, yes, I think this is amazing for Celsius in a way of proving themselves, and it's also great for the stock in the short term, but over the long term, things may reverse themselves in terms of stock price. And I'm not trying to tell you whether to buy or sell or hold the stock at all. I'm just trying to share with you guys all the facts that I have gathered so far about S&P 600 inclusion, because this is a really big deal. Personally, I am holding on to my shares for a very, very long time, and this is really exciting as a Celsius shareholder. So for one last time, congratulations to all the fellow Celsius shareholders. And remember that in January, I will be giving away the box that the Tesla short shorts came in, and inside I'll put a gift card and a handwritten note from me, and this giveaway is only for top tier patrons, and the Patreon will open back up on January 3rd, so stay tuned. Also, get your 4 free stocks with Webull. You guys are tired of hearing about it, but if you just deposit $100, you get 4 free stocks. It doesn't get any easier than that. Also, Daniel Pronk and I just started our new YouTube channel called The Finance Roundtable. There, we're going to do podcasts, interviews with other financial YouTubers, in-depth analysis, and also first looks at new stocks that pop up on our radars like IMMR. So make sure to go check that out. And we just posted a video yesterday about Immersion Corporation stock. So thanks, guys. So go ahead and check out that link down below as well. And if you found any value in this video, and I hope you did, please make sure to hit that like button, subscribe, and check out our quote of the day. You might just learn something. This one's a little more deep, but I don't know who needs it right now. Make sure to follow me on Instagram for daily posts about my portfolio, stocks I'm watching, and all of that good stuff. And if you're watching at this point in the video, you are the real MVP. Don't forget your peace and thank yous.